A very good morning. Wishing you a happy Thursday ahead. Welcome to today's episode of Morning Wealth. We'll talk about three things. Powell says has the tools to deal with it. Earnings from NVDA lows and booking. And hedge fund positioning into Alibaba. Stocks rose on Wednesday as Federal Reserve Chairman Jerome Powell again made assurances that the central bank doesn't plan to rein in asset purchases or raise its target on overnight rates anytime soon. Following up on his testimony at the Senate on Tuesday, Mr. Powell made clear before the House Financial Services Committee that he believes the economy has plenty of room to grow and that the labor market could get a lot tighter before the potential for overheating will be a concern. He said, "We have shown that we can, over the course of a long expansion, we can get to low levels of unemployment and that the benefits to society, including particularly to lower and moderate income people, are very substantial," he said. He also added, "Unemployment is high and the labor market is far from maximum employment." He noted some elevated asset prices but highlighted that cars might be more expensive because of a chip shortage and supply chain constraints. That doesn't necessarily lead to inflation because inflation is a process that repeats itself year over year over year, and that the central bank has the tools to deal with it. That was music to stock markets ears. The Dow Jones was up 1.3%, notching a new record. The S&P was higher by 1.1% and the tech-heavy Nasdaq was up by 1%. Dollar declined, though the yen also underperformed. Oil jumped more than 2% while gold retreated. Asian equity futures are in the green. Treasuries fell as well, the 10-year yields rising as much as 9 basis points to 1.43 before retreating to around 1.38. That is its highest level in just over a year. The sell-off sent the 10-year yield jumping as much as 11 basis points to a one-year high of 2.29 before pairing gains. On the economic data front, new home sales rose 19% annualized in January, faster than expected. One concern, though, is the rising lumber prices could force home prices higher, offsetting low mortgage rates. On to results, NVDA gave a bullish forecast on robust demand for chips used by video gamers and data center operators. Revenue will be about 5.3 billion in the period ending April, the company said in a statement. That compares with an average analyst estimate of about 4.3 billion, according to data compiled by Bloomberg. NVIDIA stock rose about 3% in extended trading. Couple of points from the earnings. Data center chip sales jumped 97% to 1.9 billion in the fiscal fourth quarter from a year earlier. Revenue from gaming was 2.5 billion in the quarter, up 67% from the same period last year. Chief Executive Officer Jensen Huang has built on NVIDIA's strength in PC gaming graphic chips by taking the company into new markets such as artificial intelligence, processing in data centers, and components for autonomous vehicles. The CFO said, "Throughout our supply chain, stronger demand globally has limited the availability of capacity and components, particularly in gaming. NVIDIA outsources production to Taiwan Semiconductor and Samsung Electronics, which are swamped with orders, and that's limiting NVIDIA's ability to meet demand." Moving on, Lowe's beat on adjusted EPS and US home improvement comp sales. It reiterated its guidance and said it expects to gain market share and improve its operating margin this year. Viacom CBS said streaming customers grew to almost 30 million. Booking beat estimates, said it's seeing improvement in trends in the last few weeks. Qantas first half underlying pre-tax loss came in at about Aussie dollar 1.03 billion. It said it's aiming to restart international flying at the end of October. On some hedge fund positioning on Alibaba, Alibaba is losing its luster. Hedge funds like Point72 and More Capital and the Canadian and US pension funds dumped about 101 million of its ADRs in the fourth quarter, cutting the market value of their holdings by about 89 billion. That's the biggest investment reduction among US traded companies, more than 3 times the second most sold stock, which is Salesforce. Alibaba shares have slumped about 18% since November when regulators in Beijing halted the 35 billion IPO of affiliate Ant Group. Lastly, some fixed income news. EasyJet saw strong demand for its 1.2 billion euro bond sale, its first since 2019. The 7-year notes were 4 times subscribed. The enthusiasm drove down airlines' borrowing costs, with yields falling as much as 37.5 basis points. It will likely be the largest single tranche corporate note offered in Europe's syndicated bond market this year. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.